Well, good morning. I'm Jagender Rana. So, product of the day is life insurance. Topic is huge demand for life insurance products in India. Huge demand for life insurance products in India. Life insurance remains a sunrise sector in India with low penetration, large protection and pension gap, and a massive growth opportunity over the next decade. This was the consensus view of the heads of the life insurance companies. Because the industry is ready to meet the challenges to provide insurance for all by 2047. There has been a slew of regulatory reforms, and companies have begun to work on three key issues of availability, affordability, and accessibility. These are the three prominent issues before the insurance industry: availability, affordability, and accessibility that affected growth in the past. So the industry focus is clearly to take insurance to every insurable person in the country. The growth movement is especially strong in the life insurance industry, with two new players joining the industry and many more waiting to enter it and grow further. There's no doubt about it, the life insurance industry is unique in that it meets a couple of key social needs, which is critical in a country like India with a varied and diverse demographic. So the first is life protection and the second is credit protection. So there is default if something unfortunate happens to borrowers. The industry also provides for investment and retirement risk to individuals and their families. There is currently no substitutable product in any other industry that can cover so many risks in one shot. There is huge latent demand for life insurance products in India. And as per our per capita income increases and various demographic segments emerges, this latent need for various kinds of protection and risk covers will become even more explicit. The regulator has done a great job by facilitating us to achieve the vision of insurance for all. While we are extremely enthused with all the growth opportunities and with the regulator, which in our living memory has been extremely facilitative, the industry has to work for to provide the insurance for all. Because, for example, look at the expense of the reach, whether it is the network of 2.7 million agents or 11,000 branches, and there is now a region in the country where collectively as an industry, insurers don't have the presence. So if you look in terms of the number of life covered, then 14% of the individuals in the country now have a life cover. And for most of us, more than 50% of the new business is coming from individuals 35 years or younger. So the insurers are bringing in younger and new people under the life cover. I think over the industry and the regulator need to focus is to increase coverage, whether it is through Bima Bahag, Bima Sugam or Bima Vistar. This becomes clear if we dig deeper into the coverage data. Currently 30% of individuals in urban areas are covered by life insurance, but the coverage ratio is only 5% in rural India. This could be due to a paucity of relevant life insurance products. Similarly, only 9% of women are covered against 18% of coverage in the case of men. This represents a huge growth opportunity for the industry. The biggest growth opportunity Even an obligation for the industry is to take care of the two important things as far as the insurance goes. The first is the protection gap, which is extremely high in India at around 83%, with the under protection of life estimated to be around $16.5 trillion. The life insurance is a highly under-penetrated product in the country compared to other BFSI products such as banking or mutual funds. Similarly, only 12% of the retail households in the India have taken insurance. So there is a huge addressable market that is staring at us, and where all the initiatives from the regulator and the industry will help us bridge the gap. The second is the long-term saving. People should understand that insurance is a bit of challenging category, as we are not into instant gratification, but we are into long-term savings. We are asking people to save their future and for their pensions. For instance, the pension gap in India is estimated to be around rupees 55 trillion by the end of 2050. We need to build awareness, and the message that insurance zaruri hai is still not getting into the minds of our customers. And that is where the challenge lies. That is where the challenge lies. Because as the countdown for the union budget is there, people start thinking about the tax benefits, not about the life coverage, not about the financial protection. So the insurance industry can no longer isolate itself from the changes. India is a young country which is ready to reap the benefits of its demographic dividend in the near future, along with the rapid pace of investment in infrastructure. During the past couple of years, with the initiative of government, the extent of financial inclusion has accelerated substantially. The Pradhan Mantri Jeevan Jyoti Bima Yojana and Pradhan Mantri Suraksha Bima Yojana are examples of how products that are easy to understand can get a thumping response from the market. The fact that over 15 crore persons are covered under these schemes is a barometer of their success. Products which can be sold over the counter will attract more traction. Health is one more segment which is likely to grow manifold over the next 7 to 10 years. So insurance industry has to gear up to show a growth of at least 20% year on year in order to increase penetration, which is otherwise very low in India. Theoretically, the relationship between per capita GDP and insurance penetration follows the S-curve framework and can be further classified into 4 distinct stages. That is dormancy, early growth, sustained growth, and maturity. You get it? S-curve framework can be further classified into 4 distinct stages: dormancy, early growth, sustained growth, and maturity. So while growth in the insurance market lags behind GDP growth during the dormant and early growth stages, it accelerates beyond the GDP growth rate during the economy's sustained growth period. And finally, the growth of insurance penetration reaches its maturity before beginning to stagnate during the maturity stage. With insurance penetration, total premium as a percentage to GDP at 2.76 for the life insurance business, India fares better than many other countries around the globe. Not only does it fare better than other developing economies such as Indonesia, China, Russia, and Brazil, but also better than developed economies like Germany, Netherlands, and Australia. So in contrast, the penetration of the non-life insurance segment stands at less than 1% in the country, which is among the lowest even for developing economies. So India, a country that accounts for at least 17% of the world's population, offers opportunities for both life as well as non-life insurance business. For life insurance, the opportunity is huge for the sector to realize its potential in the Indian market. However, the government and insurance providers need to intervene with focused initiatives. The government's socially oriented insurance schemes like Pradhan Mantri Jeevan Jyoti Bima Yojana, gross enrollment of 53.3 million as of April 2008 was there, and now it has crossed over 15 crores even. And the Pradhan Mantri Suraksha Bima Yojana have played an effective role in increasing insurance penetration to a certain extent, especially among the economically weak and underprivileged sections of the population. Likewise, insurers will need to act in tandem with the government to enhance the reach of insurance. In our view, this will require the following actions like spreading awareness about insurance and its associated benefits, partnering with insurtech companies to create innovative next-gen products and to enhance back-end efficiencies, and upgrading processes and mechanisms to deal with frauds and mis-selling. So India is one of the fastest growing economies in the world at present, with a GDP growth of rates of 7% in the past 3 years. Likewise, the Indian insurance sector has witnessed a healthy growth over the past few years. The reason for low penetration include low awareness, less than efficient distribution channels, complexity of products and insurance contracts, and a general lack of trust and confidence on the part of the consumers, among others. So on its part, the Government of India has introduced various socially oriented insurance schemes for social security in recent years, with close to half of the employed Indians estimated to be engaged in agriculture. The crop insurance scheme also offers great promise. Nevertheless, while these have undoubtedly played an effective role in increasing the insurance penetration, especially among the poor and underprivileged sections of the society, there is a need to position insurance as an attractive proposition for the mass. So through the Digital India initiatives, the Government of India has set in motion the rapid transition towards a digital economy. Given the unprecedented rise in smartphone usage and easy access to internet connectivity, insurance companies will leverage low-cost digital distribution channels to help deepen market penetration. Digitization has undoubtedly given rise to the new modes of fraud, and companies would therefore need to make use of big data analytics and artificial intelligence to investigate and prevent fraudulent activities. In this context, insurtechs armed with the expertise to deploy digitized solutions for the insurance sector are well poised to revolutionize the way the insurance business is carried out today and create great value for the insurers and customers alike. See, the growth drivers for insurance in India are very important because the insurance sector is on the cusp of significant growth, fueled by a confluence of compelling factors. Let's delve deeper into these key drivers. The first one is expanding economy and rising disposable income. India's economic expansion translates into a growing middle class with increasing disposable income. This translates to a larger customer base for insurance companies, as individuals have more resources to allocate towards financial security products. Then expanding middle class. The burgeoning Indian middle class, characterized by rising income levels and aspirants, is increasingly recognizing the value of financial security and protection. So this segment represents a significant potential market for various insurance products, including life, health, and property insurance. And favorable demographics. India's young population with a large working age group presents a favorable demographic for insurance penetration. This age group is typically more receptive to financial planning and long-term investment options, including insurance. Then there is increasing awareness and financial literacy. The growing awareness about financial planning and the benefits of insurance, coupled with government initiatives promoting financial literacy, are driving demand for insurance products. Individuals are becoming more informed about securing their future and protecting themselves against financial risks. And product innovation and customization. So insurance companies are actively developing innovative and customized products catering to diverse customer needs and risk profiles. This includes micro insurance for low income segments, disease specific health insurance plans, and term insurance with flexible riders. The next one is technological advancement and digitalization. The adoption of technology and digital platforms is transforming the insurance sector. Online portals, mobile apps, and AI powered solutions are streamlining insurance purchase, claim settlement, and customer service processes, making insurance more accessible and convenient. And next is the government initiatives and regulatory support. The government's focus on financial inclusion and insurance penetration through schemes like PMJJBY and PMSBY, along with supportive regulatory reforms by RDAI, are creating a conducive environment for the growth of the insurance sector. And there is increasing focus on health insurance. Growing awareness about health risks or rising medical costs are driving demand for health insurance and life insurance. This trend is further amplified by the government initiatives like Ayushman Bharat Yojana, which emphasizes affordable healthcare accesses. The most important one is untapped rural market potential. The vast rural population in India remains largely underinsured. Insurance companies are increasingly focusing on rural markets by developing need-based products, utilizing micro-insurance models, and leveraging local partnership for wider reach. The next one is rising risk landscape. Increasing risk associated with natural disasters, cyber threats, and critical illnesses are prompting individuals and businesses to seek comprehensive insurance coverage to mitigate potential financial losses. Means the Indian insurance industry stands at a crossroads, brimming with potential for significant growth, driven by a burgeoning economy, rising disposable incomes, and a young working age population. The sector is poised to expand its reach and impact millions. So the economic expansion is expected to propel India's GDP to $5 trillion by 2025 and $10 trillion by 2030. So translating to increased disposable income and a larger customer base for insurance companies. So disposable income itself is projected to grow at a CAGR of 8.5% over the next 5 years, reaching rupees 22.5 lakh per capita by 2025, empowering individuals to invest more in financial products like insurance. So additionally, the expanding middle class, expected to reach 550 million by 2025, presents a significant potential market for diverse insurance offerings. Further fueling growth are product innovation, technological advancements, and government initiatives. These factors, combined with favorable demographics, are expected to propel the market size of the Indian insurance sector to $280 billion by 2025, growing at a CAGR of 12 to 15%. However, challenges remains. The current insurance penetration rate of 3.6 or 3.8 is significantly lower than the global average, and there is substantial gap in access between rural and urban areas. So limited financial literacy also hinders wider adoption. Addressing these challenges through collaborative efforts between stakeholders, the government regulators, the insurers, and the consumers is crucial to achieving the vision of insurance for all by 2047 and securing a brighter financial future for the nation. For the nation. So this is important to understand. The huge potential is there. Thank you very much.